weekend all. Ira Epstein with your weekend edition of your SPDR ETF video. And this is for the last trading day of January, and this is the 31st, 2020. So let's talk about the markets because you went into a corrective mode now. And what's going on is primarily not the economic data so much, although the markets were under pressure this morning when the Chicago PMI came out, but not into a crashing mode. The crashing mode happened later as the market kept feeding on itself about the coronavirus and worries about it. And what the market is probably thinking about, and I was on Yahoo Finance today doing a show about it, I said, you got to start thinking. If you're getting 1,000 of these cases a day, and I was talking to other traders as we were doing this, you come in Monday, maybe you'll have 13, 14,000 cases or so for that number. Is that going to scare the market? Maybe the number is bigger out of China. What we know is the number outside of China is not monstrous. We know that the countries that it's in, such as the United States, such as Europe, they're not turning their head. They're throwing all their resources at, be it a quarantine, be airports, what they're watching. This thing will run its course. However, you went up like the sky was the limit from going into the Christmas holiday right afterwards. I remember every day the newscasters, well, we're in the final minutes, so here we go. We're going to make new highs today. All right, that phase has ended, folks. And it came out of left field because none of us had heard the word coronavirus at Christmas time. This is all relatively new. And as it's new, it gave the market a correction phase. Does that mean you abandon the idea that the markets are still basically in good shape? The trade deals aren't going to come down the road and so on. I'll let you figure that, but when traders talk, they want to come in and buy the first 5-10% correction, and then it's facing them. You know what my experience has taught me? They don't. They lose their disciplines. In order to get down to those number corrections, something has to happen typically. You're in that happening. So you can see how these markets have backed off. Now I'm going to do a shortened version this week of a weekly set of charts for you on this, and I'm not going to show how the different studies come about. You can watch the daily to see that. Suffice to say that the Bollinger Band is this black dashed line. On each chart, the 18-week moving average of closes is right here. This is the lower Bollinger Band, and I've got the 100-week average. Then I look at momentum. Now on a weekly chart, I don't consider the idea that momentum is locked in bullish or locked in bearish. In other words, the word embedded that I use on the daily charts. Momentum is either friendly, still up, neutral, or pointing down. It is still up. It is not turned down. To turn this down, the red line's got to get under 80. Hasn't done it yet. Has the market broken a prior low as measured by the swing line? And I'm putting you where the arrows of the last lows are. No. Is the market over in the tech sector the 18-week average of closes? Yes. So I am not saying to anybody, because I don't say it anyways, buy here, sell there on these videos. I do that in my daily videos for my subscribers. But suffice to say, you're getting that opportunity pullback in the market. You're down now for the week 2.16%. That's what you're down so far from the peak. When we look together at the industrial sector, the line in the sand is the 18-week moving average of closes. The market has pulled back to it. In order to get there, the market had to get under a previous low of 81.18, which it's done. So the pattern of higher lows and higher highs doesn't exist any longer. You now are out of that pattern with a higher high and a lower low. The market's down to the neutral spot here of the 18-week average, and momentum has turned down on the market. When we look at the energy spider, keep in the back of your mind who's the world's largest user and importer of oil right now. It is China. And China's been on a combination of lunar holiday, and they are the hardest hit of what? Of the coronavirus. They are the ones with, 90% of the cases. So what the U.S. did today, we have offered every kind of help. I mean, as I saw the president reach out, it's a major, major reach out. We also, in America, put on the markets travel restrictions into the United States. If you're coming out of Wuhan or one of those infected provinces to the United States, be ready. You could be going into 2 weeks of quarantine if you're allowed in the country. You heard what I said. There'll be more about that through the weekend. I heard the announcement live just a few minutes ago, and I want to get my own arms around it. But what it is America's protecting ourselves. And you have to. But quarantines aren't going to be 2-3 days. They're going to start extending out. There'll be self-quarantines that's being announced. If you come from other parts of China, possibly, they want you to tell the U.S. You might have to self-quarantine, and you'll be monitored for that. Foreigners that get into the country and are allowed in and something happens, we're going to put them up in a quarantine facility. It's spooky, but it's what's being done. Read about it. So you've broken down, you've taken out all levels of support until you come way back here. A year ago, that is where you were at. So we're down hard. Eventually, this will go away. Eventually, you're going to hear, sooner rather than later, by the way, that Russia, OPEC Plus as it's called, want to get together and probably adjust oil output as prices are too painful on this decline, and they'll try to speed along waiting for China to get back to the point where its business gets back to normal. And we don't know when that'll be just yet. In the QQQ, the NASDAQ, throw off all that you know about the disease. This is still a bullish chart. You still have on the weekly charts higher lows, higher highs. Now the market was running and has been running against this upper Bollinger Band since October. Maybe this is where the market pulls away from that. But you'd have to get under or down to 206.25 at least. That's 13 points away to do any real damage. Now keep in mind this is a weekly chart. Last week the market was down for the week 0.68. This week you're down 3.63. So together you're down 4.2% from the peak, and that's on a close that you've backed off. That's not to the low of the move completely. So we're in that range where you're starting to approach 5% corrections. Could you get to 10? Well, to get to 10, you probably got to get to that 18-week average of closes. Emerging markets. Here's the danger for the emerging market ETF. China's been closed. Now they're going to reopen. Many of the ETFs have weighted parts to their stock indices. When their indices open, they're not going to open higher. I'd be blown away. They're going to open lower. The question is how much lower? Is it a 5% drop? Is it 10? Is it 20? I don't know. Don't have the slightest idea. But I would assume this index could get hit further. I'm looking at two areas that it might want to go to, 6612 to 6500. Momentum is down. You're not trending. You have a higher high, lower low, but the bias is down. So that's what I'm looking at there. In GLD, the ETF, well, it's certainly getting all the bull news you can imagine. This is like that old movie Outbreak with Dustin Hoffman, if you'll remember. So you're getting that move. Is this all, or is the market going to continue on with it? Right now for the week, the market up 1.5%. Last week, the market, just to give you an idea, up 1.4%. So you had a minor correction going into that, and you've made it up. That's the way to look at it. Still friendly, riding the upper Bollinger Band, trend up, bias up in the market as well, and momentum. In the gold miners, you're back up to the resistance of the upper Bollinger Band. Remember what Bollinger Bands do. As an algorithm, they help you figure out where resistance and support lines are because the market will trade within them 95% of the time. Momentum is up. Again, I don't measure momentum overbought, oversold on weekly charts. Trend up into objectives that you reacted from before, so I'd be a little cautious here that that's what can go on. TLT, where you're running for safe havens. You're down to 151 or so in the 10-year note. So money has again run there. Guess what it's going to force down the road? And I know you may not agree with me, but that's okay. Eventually, people are going to go back looking for yield sooner than later, and they'll say, there's nothing wrong with these companies, the coronavirus situation, it's contained, blah, blah. Do I know that it's contained yet? No. Therefore, I understand this rally, but I also understand you're back into a resistance area, and now you're climbing into this area of the market, and you've got to say to yourself, do I want to own 1.5 10-year note? Or in this case, 20-year plus ETF. Got it? Last, the energy ETF. You've gone from the bullish mode And if you think about this, when was the Saudi Aramco deal? In this time frame. And you come right back down through it. And we had talked about, if you were watching my commodity one, I said, I feel that they're goosing the price of that oil up because they want to get those investors in and watch. Now, I haven't looked to see what the pricing of that is. It can't be good. And here we are down, but this is also a short cover area. I know you're going to say he's nuts. What's he talking about? But each time you've hit these in the past, it has proven to be that. So that's what weekly charts tell you. They give you a little bit of a discipline you play with. If you'd like to get on our list so that you can view my daily spider, you're going to need a user ID and a password. We're giving away now a 2-week trial to it. How do you get that? Go to our website at www.iraepstein.com. You'll see our free trials. Click in there. We'll be certain to get you all set up. And if you want the commodity one and so on, let us know. But we are going to 2-week trials at this point. We're getting a lot of people that want these, and we realize it, but let's give you the trial and get them in your hands. I'm Ira. Have a great weekend. I will see you all Monday.